What's up guys, welcome back to another video. In this video I'll be talking about order blocks. I'll be showing you guys what they are, how to identify them, and yeah, everything you need to know about order blocks. So make sure you watch this video the whole way through, and I promise you will completely understand everything you need to know about order blocks. So first of all, if we take a look at the definition of an order block, or otherwise known as a block. So a block, or a order block as it is commonly referred to in day trading, so a block refers to a large order of the same security to be bought or sold by institutions or a large investor. There is no official size. So what this means is big banks, big institutions, large investors that are all investing a large amount of money will put in a specific order into the market, and then that will cause a big move in price action. So let's put in another way. Say Elon Musk wants to buy 100 million worth of Bitcoin. What will happen after he buys that 100 million worth of Bitcoin? The price of Bitcoin will shoot up, and once the price of Bitcoin has shot up, it will create an order block. So let's look at an example for you guys. So it's a 1 hour time frame. Before this video started, I just marked out lots of different order blocks, so I could give many different examples. So let's look for a buying order block. So right here. So as you can see, if we focus on this order block right here that I will highlight in red for you. So if we take a look at this order block right here. So okay, we'll look at this blue one right here because it is a better example. The price. So if we look right here, somebody has put in a big order for, I'm on Bitcoin I'm on Ethereum right now because I like crypto with order blocks, because especially recently crypto is gaining a lot of traction and the price is starting to pump up a lot, so it's creating a lot of order blocks. So if we look right here, somebody has put an order in. So let's say Elon Musk has just bought 100 million worth of Bitcoin, of Ethereum, sorry. So what is going to happen is the price is going to pump up rapidly to the upside. So as you can see right here, Elon Musk has just bought Bitcoin, $100 million worth of Bitcoin. The price is now going to pump up to the upside. Okay, so then where is the order block? All the order block is the candle before this big move up, and most of the time that candle is going to be the opposite candle to the move. So if the move is a big move upwards, it'll be a red candle to the downside, and if the move is a big move downwards, it will normally be a green candle to the upside before the big candle. So why is the order block so important, you may ask? So as you can see right here, we have this order block, this black candle, which I've drawn a box. So all I've done is got this rectangle box and drawn to the right. Now what you'll see with order blocks is the price will always, 90% of the time, the price will react at this order block. So Elon Musk has bought $100 million of Ethereum right here. So when the price comes back down into this area that he has bought it at, Elon Musk will not want the price of Ethereum to go below that point, because then he'll be in a loss of a lot of money. So let's say all these big banks, these big institutions have bought in at this price right here. Then the price will come back into this zone right here. Now the last thing that these big investors want, so let's say Elon Musk, the last thing that Elon Musk wants right now is for the price to drop below this point, because if the price drops below this point, then he'll be in a loss of a lot of money. So what they are going to do is they're going to pump the price up rapidly after the price has hit this zone. And Yeah, because if they don't do that, then they'll lose a lot of money. Alright, so I know I'm only showing an example for crypto right now, but this works with literally every trading, everything that you can trade. So indices, stocks, forex, literally and everything. If you look at your chart right now, open up your chart, you'll start to see order blocks. After you start to identify the order blocks, you'll see that the price will react 90% of the time off of the order block. So if we look at another example right here, we have this order block right here. Now, what you must know is with order blocks, the price will not always perfectly bounce off of the order block. Sometimes the price may mitigate inside of the order block. Sometimes the price will tap just outside of the order block to completely fill the order block, and sometimes it will just tap the top of the order block, like right here. Actually, perfect example. If you look right here, the price has just tapped into the order block a tiny bit. So multiple things can happen when it comes to trading an order block. So if we look at this example right here, we have this big move to the upside after and if we look to the left of that, we have our red candle. Let me just move this rectangle box so you can see it more clearly. See this red candle right here. This is where you would join your order block zone, because it is the opposite candle to that big move up. So then we draw our rectangle box there, and what can we expect from this? We expect the price to bounce and react off our point. Now, what you shouldn't be doing is you should not just be entering into a long position right here. Your stop loss below. Yes, you can do this, and yes, sometimes it will work, but you must wait for confirmation. But I'm not going to get into that because there's also a lot of more things that come into that. It's not just confirmation, it's also liquidity, and yeah. So when it comes to trading order blocks, I can make another video on that because that will be a whole video in itself. So just leave a comment below. I'll reply to all the comments as well. So just leave a comment below or message me on my Instagram. I reply to 100% of my messages on both of those platforms. So if you want me to do a example of how to trade using order blocks, then just let me know and I can make a video on that. No problem. So here we go. We can see that we have drawn this order block out. The price has reacted off of this order block, completely filling the order block right here. And because all these big institutions, these big banks have got into the market right here, they do not want the price to go below this point. So I hope I'm keeping this very simple for you guys, because this is quite simple, but it is extremely useful for you to understand. So if we look right here, we have a big selling order block. So somebody has sold a lot of Ethereum right here. So let's say a big bank, a big institution has sold lots of Ethereum right here. They want to get out of the market. So if we look right here, we have our green candle to the left of our big red candle. So this is our order block. So we drag that to the right, and then we see that the price has started to react off of this point. And now earlier, you remember me saying how you should not just enter into an order block, and this is the reason why. If we look here, the price has tapped into order block, filled our order block, but then what has happened? It has shot up past our order block right here. Now, a lot of people would have been liquidated, would have had their stop losses taken out, and this institution, if they didn't get out of the market down here, well, never mind, they did get out of the market, or if they opened a short position, then they would have lost a lot of money right here. So this is one of the big risks when it comes to trading order blocks, is that if the price is going to break the order block, the price will most likely break the order block rapidly. 90% of the time, what you won't see is the price just go like this, and slowly break the order block. If the price is going to break the order block, it will just shoot out of the order block. Now, the reason I know this is because I use this trading strategy a lot of the time, and that is just something that I commonly see. So we'll look at one more example. Right here we have our order block. So we have our big move to the downside, and then what do? We draw a rectangle tool, drag it to the right, and as you can see, the price has hit our order block. It is failing to go up. It is failing to break out of the order block, and the reason for that is because if the price does go into this zone, then this person, this bank, this institution that has invested a lot of money into selling Ethereum, into opening a short position on Ethereum, would have lost a lot of money because they don't want this to happen. So yeah, as I've said, order blocks are very simple. You just need to understand that price will most likely mitigate, or price will bounce off of the order block. But if price is going to rapidly break the order block, it will most likely break the order block extremely rapidly. So as you can see, you can also use this on lower time frame, but for this to be most effective, you want to use this on higher time frames, because that just shows it's a lot more accurate. But you could go to the 15-minute and then you'll see more order blocks. But if you want to be using higher time frames for this, what I can also do a video for you guys is fair value gaps, or imbalances, as some of you might know, which is just a gap in the market, and that is an extremely useful tool to trade. So expect a video on imbalances or fair value gaps very soon. So I hope this video has helped you guys a lot, and if you want me to do a video on how to trade with using order blocks, then I can definitely do that for you. But the goal of this video is for you guys to be able to identify order blocks and recognize order blocks and mark out order blocks on your own charts. So if you have any questions, just leave a comment below, message me on Instagram. I reply to 100% of the DMs on both platforms. Thank you guys for watching this video. See you in the next one.